Welcome back to Wake Up America. I'm Alex Kramer with today's business headlines. So let's start off with a quick look at those markets. S&P, NASDAQ, and the Dow all closed slightly lower Friday. This after a weaker than expected jobs report. So what could this mean for potential rate cut from the Fed? Joining us now in studio is Marc LoPresti, Chief Marketing Strategist and CEO at Market Rebellion, as well as Mitch Firestein, financial market analyst and author of Planet Ponzi. Gentlemen, thank you both for joining us in studio with us. Marc, I'm going to start with you on this one. Let's just start with those markets. They ticked down Friday. Was that in line with expectations?
Yeah, it was. And I think it was actually a fairly muted response to what was a pretty significant miss in terms of Friday's jobs numbers. And last week was all about jobs. We had the Challenger report. We had the ADP report. That's my favorite in terms of the accuracy of the numbers. We can get into that. But yeah, I mean, look, they missed by about 50,000 jobs more, right? A weaker jobs market, a weaker employment picture than the market was expecting. But it's a good news, bad news scenario because that means we get that rate cut in September. And as I think Mitch is going to say, maybe 2 more before the end of the year.
Absolutely.
Is that what you think, Mitch?
I think we're going to get 100 basis points of rate cuts this year, which were well overdue. And I think that those numbers on Friday, we also had revisions that we need to look at. And the revisions that came out were lower than expected. And on the 9th, we're going to have annual revisions coming out, which should show that we've lost about 800,000 jobs during the Biden administration that were non-existent because of what they do is a birth-death rate that's absolutely made up numbers by the BLS. So the integrity of those numbers and the data has always been bad.
Yeah.
But we did see the positive news on that front was we saw the 10-year bond, which is linking to the mortgages, drop to 4.07%, and mortgages dropped to a 1-year low of 6.29 for a 30-year fixed, which under Biden was as high as 7.79%. So that's really good news for consumers out there that want to buy houses.
Well, Mitch, you're leading me exactly what I wanted to talk about next. Those mortgage rates finally breaking out to the high 6% range. They've been stuck in there, my goodness, for months. The average 30-year dropped 16 basis points on Friday. The biggest single-day drop since August of last year, but this comes amid some concerns after Treasury Secretary Scott Bessent now warned a potential housing emergency. We talked about that last week. Marc, what's your advice to maybe potential home buyers right now?
Sit tight.
Okay.
So if Mitch is right, and I think once we get that revision that we're expecting on the 9th to last year's jobs numbers, we are going to get to at least 75 basis points. I'm curious to know which the 50 basis point meeting might be. Mitch probably knows better than I do. But if we do get that, that's as much as a full percentage point between now and the end of the year.
Wow.
So your mortgage picture, and I've spoken to people, cocktail party conversation, what have you, they watch the show, of course, and they ask, look, things are moving, houses are starting to finally turn over, should I make that move? And my advice is, give it a couple months, it's gonna be cheaper, and it's gonna be a better environment.
Yeah, Mitch, I would love for you to weigh in on this as well.
Well, look, I think that we do have more downside ahead in the markets in terms of interest rates. I think that we will see mortgage rates below 6%. I do feel that this is gonna happen before year end. I think that the Fed has been too late and he's waited too long to cut rates, and they should have done it preemptively instead of waiting until the last minute. They need to be proactive rather than reactive, and he's been very reactive and hasn't showed leadership at all. So it's time for big changes, and we need to reimagine the way we look at the Federal Reserve.
I love that you said too late because that's Trump's nickname for him, is Jerome Too Late Powell. But changing gears a little bit, so shares of Kenvue, the makers of Tylenol, actually tumbled more than 10% Friday. So that drop coming after reports that Health and Human Services Secretary RFK Jr. may be linking Tylenol use to autism in an upcoming report. Very interesting stuff here. Marc, should other pharmaceutical companies maybe be worried about any other similar reports, any market fallout?
Yeah, I think the short answer is yes, right? And when asked at almost any point in time of the year, what sector are we most concerned about? What sector do we see a lot of bearishness in? It's healthcare and pharma. Not only because of like the very famous problems that United Healthcare has had with the Department of Justice, but we were expecting RFK Jr. to deliver on his promise of bringing some unique and different thinking to an agency that frankly has needed it for a long time. And I applaud him for looking at the autism rates in this country over the past 20 years have just skyrocketed. It's terrifying as a parent of a young kid. This is a terrifying, terrifying thing. And so we got to look into what is the cause? What is the linkage, the causality, as they say? And so I think this is the first. And even if these inquiries are not found to ultimately have causation, the cost and the distraction for shareholders and the messaging is going to hurt stock prices. So I expect to see this to continue, yes.
Yeah, my goodness. So much going on here. And again, we finally have RFK Jr. at least willing to take a look at this kind of stuff. Mitch, Mark, thank you, gentlemen, for coming in this morning.
Thanks.
Fantastic conversation.
Great, thank you.